Hi, there's a problem with about half the tire and service businesses that I run across, and I just had to tell you about it. I'm Michael McGregor. I'm an M&A investment banker with Focus Investment Banking, and I'm part of a team that helps tire dealers with mergers and acquisitions. But I'm also a columnist for Modern Tire Dealer. In the January Facts issue of Modern Tire Dealer, I wrote an article that deals with the interplay between real estate value and business value when the tire dealer owns their own real estate. Now, I wrote the column because about half the time I find that when I'm taking a look at a client's P&L or a prospect's P&L, I find that there's no rent expense line or that the rent is way below market. So this can impact the value of the real estate and the value of the business. And since my job is to get the highest price for both, this becomes a hurdle to that. Here's why it's a problem. First, most strategic buyers, what they really want to do is they want to buy your operating company, the tire business, but then they'll want to lease your real estate for like 10 years or so with multiple options to renew. Now, there's no way that you're going to enter into a 10-year lease at below market rates. So what do we have to do? We have to figure out what the fair market value is for the real estate. Generally, we have to raise your rent expense. Now, what happens when we raise your rent expense? Well, your profitability comes down. And since the value of your business is based mostly on the profitability, then the value that you get goes down. But listen, even if you're not looking to sell your business, having no rent expense or having lower than market rent means that you might be operating on a fictional cost structure. Your prices might be too low, your margins could be too low, and you're definitely leaving money on the table. Now, I've heard from some tire dealers that, listen, I already make enough money, I don't want to have to pay any more taxes. Fine. At least on your operating statement, have that fair market rent in there so your store people know that they have a higher nut that they have to hit. My personal preference, I think you ought to pay yourself fair market rent, pay taxes on it, pull the money out, diversify your assets. Now, your real estate value might actually be worth more than your business value. For retail locations, industrial locations, a lot of the value of that is based on the net operating cash flow from that. So if you're locked in at below market rates, the value is impaired. Now, my January Modern Tire Dealer column has a real world example, it has some numbers, has a logic behind it, a lot of what you need to know about this issue. I hope that you find it helpful. If you have any questions, please call me at 704-369-5900 or email me at michael.mcgregor@focusbankers.com. Thanks for watching, and thanks for being a loyal Modern Tire Dealer reader.